Welcome to the final Crypto Corner of 2025. I'm Jenny Horne, host of Next Gen Investing on Schwab Network. Now, to look back at some of the biggest developments in crypto throughout the year, I'm joined by Jim Ferraioli, Director of Crypto Research and Strategy at Charles Schwab. So, Jim, first and foremost, many investors believe that 2025 marked a turning point for mainstream crypto adoption, from asset manager inflows to broader integration across platforms and, of course, various payment and trading platforms. What really changed this year, and is this momentum now sustainable into 2026?
Hey, Jenny. The biggest change that happened this year was really a result of the new administration coming into DC. They had positioned crypto as a central policy goal. And now we got some of those policies across the finish line, specifically the Genius Act, which created a regulatory framework for stable coins. They still, I think, put out a successful crypto agenda. We're still waiting for the Clarity Act, which is the bill that determines who has regulatory oversight of cryptocurrencies. We're waiting for that to pass in 2026. But overall, it was definitely a good year. Thinking about some of the things that happened, first, you had the administration appoint a crypto czar to focus on different crypto initiatives. You had a version of a strategic Bitcoin reserve, which essentially said that the United States government should retain cryptocurrencies that had been confiscated due to illicit activity. And then the big one was obviously the Genius Act. Didn't really present itself looking back in price action, but I think the activity and progress we've seen is going to continue in 2026 and going forward. Every day there's new institutions and organizations that are looking to now adopt digital assets or move some aspect of their business on chain. And so I don't foresee that slowing. To put that in perspective, if we look at the sum of all the fees that have been generated on the Ethereum blockchain over the past year, it's been close to $9 billion. And that's about 16% higher than it was in 2024. So again, we are seeing that momentum. That's fundamental activity, mostly driven, if you look at the fees in Ethereum, it's things like lending, stable coins, and liquid staking, which is a way to provide liquidity for investors who have staked their cryptocurrencies. And so these are more fundamental use cases compared to kind of meme trading and things like that we've seen on another blockchain. So I think that momentum is alive and well, and I'm excited to see what happens in 2026.
Okay, so regulators did make several of these high-profile moves in 2025. So in your opinion, did we get any meaningful clarity that makes the industry stronger? Or, of course, the other narrative is, did new rules create more uncertainty around things like innovation, DeFi, and stablecoins?
I think the clarity is going to help the broader digital asset industry. So, first, if you look at the Genius Act that established clear rules about what stablecoins issuers can and cannot do. And since then, we've seen large financial institutions start to look towards tokenizing deposits, right, which is a different product than a stablecoin. So it has definitely created what I would say a tailwind for the industry. Now, to your point that there is a bit of uncertainty regarding stablecoins here, right? That a lot of the banking lobby is looking to push towards maybe establishing that stablecoins cannot pay rewards because some would interpret that as interest. But I think the bigger picture is that this is a positive for the digital assets industry. It's going to allow more organizations to explore moving products and offerings on chain. And so ultimately, the more products you get on chain, the more users who had not been interacting with cryptocurrencies and blockchains in the past, the more likely they are to start interacting in the future. So again, it just results in a pipeline of future users of crypto, in my opinion.
Okay, and so beyond prices, the big story this year also seemed to be how crypto intersects with the broader tech themes we've seen emerge. So is this a real utility trend or perhaps another hype cycle?
I don't think this is a hype cycle. This has been a very fundamental aspect of cryptocurrencies for several years now. If you just look at Bitcoin, the biggest cryptocurrency, miners are inherently data centers. They all moved to low energy cost areas over the past several years for many of the reasons that these AI data centers are now trying to figure out how they can get cheaper power and fund their AI. And so I think this is a trend that's going to continue. One of the things that a lot of investors miss is that the energy grid has to maintain its output. And so during periods of low demand for electricity, this actually presents an opportunity for crypto miners where they can step in, they can ramp up operations to keep that power generation demand stable. And then again, in periods of increased activity, which we've seen several times in the past, for instance, in Texas, when there have been heat waves, we've actually seen miners shut down to allow for more of that energy capacity to flow through to other areas and other of demand on that power grid. And so I don't think this is an area that's going to kind of decouple. In fact, I think broader integration as you go. The biggest Web3 enthusiasts envision a world where in the future there's AI agents independently interacting on blockchain networks. And so these agents, which are going to first rely on miners to help maintain the power grid during periods of peak and lower demand, but ultimately, if you believe in that narrative, there's going to be an unlimited amount of these AI agents that can be transacting and interacting on these digital networks. And so again, I think this relationship is just going to continue to strengthen over time between AI and blockchain and cryptocurrencies.
Yeah, it'll be a fun space to continue to observe and, of course, discuss as we head into the new year. But appreciate it so much, Jim Ferraioli, and Happy New Year. And thank you all for tuning into this week's Crypto Corner and tuning in all year long. For more crypto content, remember to subscribe to the Schwab Network YouTube channel. That'll do it for us here. I'm Jenny Horne. We'll see you again next week.